You know the drill, right? We're told to work for 40 years, save up, and then maybe you get to enjoy life. But what if that path is just too long? What if there's a totally different blueprint for financial freedom, one that doesn't make you wait decades? Well, that's exactly what we're going to break down right now.
So let me just ask you something straight up. What's your number? I mean, the exact dollar amount you'd need to just stop working for good. Most of us have kind of a vague idea, but let's make it real.
Okay, so let's say you just wanted to generate about $2,500 a month in retirement. Financial planners have this thing called the 4% rule. Basically, it means to get that income, you'd need a nest egg of $750,000. Yeah, for most people, that number feels massive, almost impossible.
And if you stick to the traditional path, saving a little from each paycheck, you're looking at 30, maybe even 40 years to get there. But here's a thought. What if the whole goal wasn't to save this giant pile of money? What if there was another way to get your freedom in just a fraction of the time?
This brings us to a pretty radical shift in thinking. Instead of grinding away for decades to save, this alternative path is all about one thing: generating active cash flow. We're shifting our entire focus from a passive, long-term saving game to an active, short-term earning game.
And this changes absolutely everything. The goal is no longer that huge, intimidating $750,000 number way off in the future. The new goal is to build a system, a machine that generates that same $2,500 a month, but does it now. It's a switch from saving for your future self to creating income for your present self.
And this slide just lays it out perfectly. On the left, you've got the 9-to-5 grind, 40-plus hours a week. On the right, a model like active day trading that aims to generate income in just a couple of hours a day. Look, the efficiency here isn't just about money. It's about buying back your most precious asset, your time.
So, active cash flow sounds great, but how do you actually do it? All right, let's get into the nitty-gritty. We're going to break down the blueprint. It's a really disciplined two-part strategy for finding specific opportunities in the market and knowing exactly when to act.
So it really just boils down to two things. Step one is selection. You can't just trade anything. You are hunting for very specific kinds of stocks that have the potential to make big, fast moves. Then comes step two, execution. And this is not about guesswork. This is about being patient and waiting for a repeatable, specific pattern that screams, now's the time. This is basically our checklist, the 5 pillars for finding those explosive stocks. You want one with a major news story behind it, crazy high trading volume, and a price in that sweet spot between $2 and $20. But this one is absolutely crucial, a low float. That just means there aren't that many shares available to trade. So when demand suddenly spikes, boom, the price can go parabolic. If a stock checks all these boxes, you might be looking at a rocket ship.
But finding the right stock is only half the battle. So your scanner flags a potential winner. Now this is where the real work begins. It's all about patience. You don't just jump in. Instead, you pull up the chart, you sit on your hands, and you wait for one specific, high-probability pattern to show up.
And this is the pattern right here. First, you see this powerful surge up. Then, the stock kind of takes a breather, right? A little momentary dip. We call that the pullback. Your entry point is step 3, the exact moment it starts to move up again and breaks past that first high point. It's the signal that the momentum is back on.
Now look, having a strategy like this is one thing. But the real challenge, honestly, the hardest part of this whole game isn't about reading charts, it's about mastering your own emotions. Because without discipline, the best strategy in the world is completely useless.
And this quote just gets right to the heart of it. The secret isn't about winning all the time. It's about becoming a really, really good loser. It means you can take a small loss, take it quickly, and not get emotional about it, so that small loss never turns into a disaster.
Because if you can't, you risk falling into this, the emotional death spiral. It starts with a loss. You get angry, you get frustrated, so you jump right back in to try and win it back fast. That's called revenge trading. You throw your rules out the window, you take sloppy trades, and of course you lose even more money. It's a vicious cycle, and this is how accounts get blown to bits.
So to protect yourself from that spiral, you need some non-negotiable guardrails. These are hard and fast rules you follow every single day no matter what.
The first guardrail is your daily max loss. You decide, before you even start, that you will never lose more than, say, 10% of your account in a single day. The second you hit that limit, you are done. Close the laptop, walk away. This one rule will prevent a bad day from becoming a catastrophic one.
The second rule is your circuit breaker. It's simple. 3 strikes and you're out. If you have 3 losing trades in a row, you stop trading for the day. No questions asked. It's a sign that either your head's not in the game or the market just isn't cooperating. Either way, the smartest move is to step back.
But out of all the rules, this is the most important one of all. Before you even think about putting one real dollar on the line, you have to prove you can be profitable in a trading simulator. This is the step most people skip, and it's why they fail. The simulator is your training ground. Look, if you can't make money with pretend money, you are definitely not going to make it with real money.
Which brings us to a final, really crucial question. Is the real goal here to just stop working altogether? Or is it to find a much more efficient way to work? To build a system that buys back your time, giving you the actual freedom to live your life on your own terms? Something to think about.